Hi, everyone. I'm Trent Jacobs, the digital editor of the Journal of Petroleum Technology, and welcome to SPE Live. I'm coming to you from the SPE offices in Houston, and today we have a very special guest for you, Sir Mark Moody-Stuart, who entered the oil and gas business in 1966 as a geologist with Shell. After serving several leadership positions there, he would eventually serve as Shell's chairman by 1998. And though he retired from the company in 2006, Sir Mark Moody-Stuart has stayed very busy writing a book on sustainability and business ethics in 2014. And he's also known as the longest serving board member of Saudi Aramco. And he's on the board of several other organizations, including the Global Compact Foundation, which encourages businesses around the world to adopt sustainable and socially responsible policies. So needless to say, our guest today has a very broad and insightful perspective to offer us on the oil and gas industry and how today's unique dynamics are reshaping it. Sir Mark, welcome, and thank you for talking to us at the SPE.
Thank you very much, Trent, and I'm glad to be here.
Well, great. Well, I have a question. Where are you joining us today from?
I'm in Sussex in southern England, just under the Chalk Downs.
Well, thank you again, and I'll just say, good morning, good afternoon, and good evening to everybody watching, because we know you're joining us from all over the world. Sir Mark, I want to kick it off here because we're sitting here today at the intersection of COVID-19 and a historic oil price crash. And so, when the dust settles, how would you describe what the landscape of the global upstream sector, in particular, is going to look like for all of us wondering?
I think we're going to see a significant change. I've thought that for quite a while, because as demand flattens, and I think it's flat already and may decline in the mid-2020s, the oil will become a more normal commodity. What do I mean by saying that? For the last 40 years, oil has not been like iron ore or copper or nickel, where the major low-cost producers have dominated 80% of the market and the higher-cost producers take up the tail. That's because OPEC and friends have held the prices up and allowed progressively higher-cost producers to come in. That started with the North Sea and the Alaskan North Slope, Deepwater Gulf of Mexico, and most recently, shale. Now, why would that change? Well, if you have continuously growing demand, it means that the low-cost producers can keep the price up, they can keep their market share flat, but their income still grows because the market is growing. When the market demand is flat, you get a fight for market share. They can't keep the price up by restricting production, otherwise they go out of business. They restrict themselves out of existence. So they will go for market share. And I think you already see that among some of the low-cost producers. It's difficult for them to do because they need the money for social reasons to maintain the economies. And the investment cost to put in even low-cost capacity is very significant. So it's going to need a lot of careful thought on the part of the low-cost producers. But I think they're already at it. And I think that's a change we will see. So we should not expect prices, in my opinion, to go back to the good old days of high prices. I think, we'll be lucky if we get much above into the early 50s, low 50s.
I'm curious. I want to stay on this point of low-cost producers versus high-cost producers for another moment and break it down a little bit further. As you said, low lifting costs tend to exist in places with high social costs. And so it's hard to unwind those overnight. And so you're talking about, some sort of, timeline here. And then on the other side of the world, as activity slows for, high cost producers, which includes the U.S. shale sector here, I'm curious, how is there not a risk of creating a supply crunch in the short term, which could drive prices right back up if this balance isn't handled correctly?
I think that is a risk. That is a risk. We've seen a lot of major projects cancelled and drop off in shale. But there are, of course, still low-cost projects being sanctioned, and some of the shale production is low cost. So I think we won't see growth in shale. We'll see a flattening of production in shale. But you're absolutely right. It's difficult because of the social cost. And I think what you'll see, we should remember, of course, that Saudi Arabia has normally, historically, kept something like 2 million barrels a day of spare capacity. Amazing that you can switch on within 30, 60, 90 days. That spare capacity is beginning to be eroded, but it's still there. They demonstrated that by going to very high production levels. The total capacity is 12 million. So I think we'll see people investing to increase that capacity. But as I said, it's expensive and there are a lot of demands on the money from elsewhere. In another world, you might see them getting money from somewhere else, but that may not happen in the Middle East.
You know, I'm going to press you on this point for one second more here. If demand is flat at 100 million barrels a day, or if it goes to 110 and then flattens out over the next few years, you know, the analysis don't agree there on when that will happen. This is still a very large volume of oil if we put it into historical, you know, standards. And so I'm curious if the OPEC, you know, so-called low-cost producer basket is actually still going to be big enough to sort of meet that demand, or does it leave room for niche suppliers, albeit at a low growth or no growth situation? So we go back to the high producers, the U.S. shale, offshore, heavy oil. Are they still have room to play for a decade, a 2-decade period, or is it going to be more constrained as you see it?
No, I think there will be room to play. This is not going to happen overnight. It'll be a question of when there's an opportunity in the market, and we've seen that. The lower cost producers jump in to try and ratchet up their market share. That's what happens in other commodities. It's always happened. If you look at iron ore, it's well worth us oil people looking at other commodities and seeing how they work. So there will be room, but people are only going to sanction. I think they will learn to only sanction projects which can produce at you know, current oil prices and make a lot of money at current oil prices. And there are not so many of those around, with perhaps needing downside protection down to $30 or something like that. It'll be a very interesting game. The other problem with the low-cost producers, of course, is that some of them are in, you look at Iraq is a low-cost producer, but well, Venezuela could be, but you know, chaos and confusion. Iran under sanctions, so that basically leaves the Arabian Gulf producers, low-cost producers.
Right. No, it's a good point. We've seen Venezuela almost knocked offline completely. Libya is off and on due to instability that's been going on for years. So that's a fair point. I want to switch gears slightly because the other driving force of the day, outside of the pandemic and questions about peak demand, but this all ties in, is the energy transition. And you've been a major voice in the need for the oil and gas industry to embrace the energy transition for years now. And I encourage everybody out there listening to go, you know, Google some of the op-eds you've written and some of the other things you said on panels. But I'm really curious if you can share with everybody watching today, you know, what shaped your views on this most? Because if you know, when I looked you up, this was not an overnight realization that you made on the energy transition. It appears that you've taken years to formulate it. So could you take us back to what your step one was?
No, I think we've seen in our industry a continued evolution of energy forms. You go back to the beginning of the 20th century. You see, we had wood and coal and a little bit of oil, and then gradually natural gas came in and grew and backed out heavy fuel oil and so on, so that we went to increasingly light. So that technological change has driven everything. I remember saying once to the then Saudi oil minister, Ali Naimi, who's a great man, in the 90s, I said, Ali, what do you think? What do we do about renewable energy? He said, Mark, don't worry about it. Renewable energy will do what technology always does. It will change the scenery, and the costs will come down. And that's exactly what we've seen. I mean, the costs, I'm involved in a renewable energy, Chinese renewable energy company, wind turbines, and the cost reduction is remarkable. We know that from the oil industry. If you look at how we've reduced costs, so other guys are just as smart, and I think, frankly, we're as smart, and we could do it as well if we put our minds to it. So there will be a transition, but it's not going to collapse overnight because we have to replace production, huge investment needed, and of course, there's the question on the return. Nobody has produced anything so far that at higher oil prices gives you a return like a good upstream oil field.
Well, that leads me to the next question, which is, sort of the, where are we now question. If you take your experience and look at the trajectory of the oil and gas industry on this front of embracing, renewables and just diversifying the portfolio, where is the industry? Is it where it should be? And where does that trajectory take us in the next 5 or 10 years? Because it feels like we've seen a lot of change just in the last 2 or 3.
Yeah, I think the chief executives of the major oil companies are in a difficult position. It's fascinating. How fast do you try and place your bets on the other side, maintain the dividend, which it's demonstrated they can't do, so it's a question of speed and when. If we knew when and how fast, COVID, developing countries, what's going to happen to all the growth is in the developing countries and China. You tell it's been declining in the OECD. So you've got the forecast growth is a difference between 2 very large numbers, and both of the large numbers are unpredictable. So it's doubly unpredictable. So I think that the challenge is one of return on investment and the attitude of our investors as well. And the return on investors is on investment is going to be it's maybe double digits. I have a theory, looking back at our experience with liquefied natural gas plants in the 90s and so on, and going back before that into the 70s and 80s, we always struggled to get the return of an LNG plant up into much above 8%, 10%. It was a big investment, paid out very slowly. But boy, when it was in there, because you weren't doing anything to it, it spun off continuous cash. And renewables, I think, are like that. And I think there's a theory that says if you put together a portfolio of 10, 12% investments, you can build something which gives you a very reliable dividend profile, cash surplus profile. I don't know. It's people are working on that. But I think that's what will happen, because the opportunities for the higher return upstream investments will probably reduce.
What are your thoughts on the impact of COVID-19 here? Because certainly, the energy transition did not begin, in January or March when all the lockdowns began. This has been, brewing for a long time. And a lot of the investments that the likes of BP and your former company Shell have been making have been in the works for a long time too. But they were made under different price assumptions. And so, it's a very different world from $60 oil to $40 oil, WTI. And so how does, the impact of demand and prices actually impact the ability for these companies to fund their transition? As you said, we've seen a number of people get rid of the dividend, which is the thing that's been keeping investors interested in oil and gas stocks for a long time.
Yeah. And I'm a big Shell investor, so I've felt the pain. I actually support them doing it. I thought they could have been 2/3 is a big whack. I'd have gone for half, 50% cut rather than 2/3. Anyway, no, it will be very difficult, and it means belt tightening. But we shouldn't forget. I mean, we oil and gas folk shouldn't forget that investment, even folk like me who see it happening faster, flat demand from more or less from now, but keeping flat for quite a while and only declining way down the line. I think we need to look at the other opportunities, hydrogen and things like this. So we're not all going to be out of a job tomorrow, as it were. It's going to go on for quite a while. And I hope that those companies will use their skills in developing some of the new technologies, including, as I've said, hydrogen.
Well, so we talked about renewables. We talked a little bit about, we've kind of tangentially touched on, the solar and wind. And then, as you mentioned, hydrogen is sort of seeing a revival and interest. If you're old enough, you remember, the first time we heard about hydrogen 10, 12 years ago. But there's this other, element to this whole energy transition, discussion, and it's around carbon sequestration. And this is also getting renewed interest. So I'm wondering if while we're talking about investing in renewable energy systems, diversifying the portfolios, the high cost to low cost producer transition, are we talking enough about CO2 sequestration, which at the end of the day uses a lot more of the industry's core skill sets?
Absolutely.
And you're a geologist, so you must continue.
And I've long been an enthusiast for carbon capture and storage. But we've not always been good at selling these technologies. And ironically, the civil society organizations who should be supportive of anything which captures carbon have tended to see it as a kind of lifeline for an industry which they think is the source of all evil. And that's a great pity. And the other great pity is that we've been talking, Shell and BP have, to my knowledge, been talking for something like 20 years about the need for a carbon price. Because unless you have a price on carbon or tough regulation, you can't make carbon capture and storage pay. So I think it's absolutely part of the solution, but we have a lot of work to do to convince people that really is so. I think there's some good work being done around the North Sea to get, after a lot of shilly-shallying and asking for subsidies from government and so on, the industry is beginning to get together and make investments in major industrial gathering systems. And I think that's excellent. And I think we will see that. And when people realize that you can't do everything with batteries and that you will need hydrogen, I think the opportunity for so-called blue hydrogen from methane, but with carbon capture and storage, will be considerable. It's expensive at the moment, but so is green hydrogen. But the costs of both will come down. Green hydrogen being hydrogen from renewable energy. The costs will come down. So I think there are ample opportunities, and it's up to us in the industry to make sure that we balance our investments and don't give up on things like carbon capture and storage. But it's been a long, painful story. And you referred to hydrogen. In the 2000s in Shell, we had a hydrogen unit. We were that enthusiastic about it. I certainly was. And we've seen, how that has languished and auto manufacturers haven't picked up on it and so on. I see that Aramco has just made the first shipping was only 40 tons, but 40 tons is a start of so-called blue ammonia, as ammonia being a method of transporting hydrogen. So this is ammonia made from hydrocarbons with the CO2 from the production being absorbed. And I think that's a good demonstrator. But as I say, it's only 40 tons, but it's an excellent start. And it's going to Japan because Japan needs it to run power stations.
Yeah, I want to back up real quick to something that you said that would drive carbon sequestration, or CCUS, and it's the long fabled carbon pricing.
Yeah.
And so we've been hearing going to conferences and watching the industry. We've been hearing that carbon pricing is inevitable for a long time, and at some point you sort of wonder when inevitable is. And so, without that financial incentive for oil and gas companies to invest deeper into CCUS, does it have the potential of becoming a lost opportunity for the industry? In other words, could we see other sectors, take over carbon sequestration away from the oil and gas industry, which, like I kind of said, has the most experience with, reservoir engineering, on the planet?
No, I don't think you'll see other sectors. I don't think there's anyone who could come within a big mile of the oil industry when it comes to carbon capture and storage. But I do think the whole issue of this deferred, long-promised carbon price, I'm told that something like 2/3 of markets have a carbon price now. China, I think, is a big hope. They're experimenting with it. And China, of course, experiments with a lot of things. And actually, I think, takes the whole environment and transition quite seriously. And they don't, of course, necessarily, they can do quite a lot by mandating it, as long as the people stick to the rules. So, I think the tragedy is that the European trading system, which in theory was very good, got off to a bad start because of cheating and political shenanigans and so on. And then in 2000, at the financial crisis, they took the brakes off it when they should have actually restrained the rationing of CO2 production, which is a pity. But I think, almost universally, I think, economists say that a reasonable carbon price or a carbon tax, can't be picky about your methods, is absolutely essential. And it's a tragedy that we haven't had. I talked to a guy from Extinction Rebellion. He was on a panel, and I said to him afterwards, I said, how come you guys don't, here's the oil industry, the major oil companies are saying we need a carbon price. They are asking for a tax on their product. And here are you, why don't you leap on it? It's an industry you hate who's asking for a tax on them. You should leap in there and say, yeah, we agree, whack it up. And he said, no, it's just, we just have to get rid of the industry completely. And that's such wrong thinking, I think. So one of the things we have learned in the world is that we need collaboration, and we need to sit down and have reasonable discussions with the environmental groups, which was done in the mining industry. The mining industry in the late 90s got together with the environmental groups and said, look, you don't like us, but you need us. Unless you're going to eat with your fingers, you need us. And they came up with something called Mining, Metals and Sustainable Development, out of which came the ICMM, International Council of Mining and Minerals. Only recently have we in the oil industry, regrettably, got together with something like the Oil and Gas Climate Initiative, which is a start, because the ICMM was run at a chief executive level. The chief executives of the companies had to be in the meetings. They couldn't send their sidekicks. And then you got a bit of alignment. The OGCI is like that. It's a good start. So I think we have, but we need to bring the civil society organizations in, the rational ones, and many of them are very rational. We may not agree with their methods sometimes, but if we can agree that we have a common objective and that oil and gas is part of that solution, then I think we could make progress. But the world is not too hot at the moment on collaboration between large groups.
Well, on that point, this is one of my last questions for you. You know, there are accusations of industry greenwashing with these initiatives, and so, you know, if we look into the future when the energy transition is at a more mature, maybe a clearer and more predictable state, do you think that we're going to look back and see that the oil and gas business, because of its investments in all the things we talked about, renewables, hydrogen, CCUS, promoting cap and trade or carbon taxes, do you think that in time that could actually reverse some of these negative perceptions and actually leave the oil and gas industry as being seen as part of the solution? Or is the risk of this greenwashing so high that, you know, maybe nobody will see that?
No, I think the answer to accusations of greenwashing is total transparency. We have to really report and have externally verified reports. If you look at the whole issue, I mean, the natural gas, which is a terrific transition fuel, it's exactly what you need to support intermittent renewables. Yet, we get told that natural gas, actually loses a lot of its advantage because of leakage. And there's a lot of truth in that. And responsible companies have got together and driven down the fugitive emissions and so on, and are using satellites and working with people in civil society organizations to say, look, we're actually doing a good job. And, you know, Saudi Aramco, which I have a vested interest in, as it were, being on the board, has done a fantastic job on it. Not initially because they didn't like wasting gas and they were short of it. So I think we need transparency and to invite people in and look at the operations and report numerically on what it is. And that means, I think, because some of the biggest gas wastage is unfortunately in fracking, in the United States. And that's a pity, and that has to be cleaned up. I mean, I remember a time when I used to say to people, Google Bakken shale from space. And you could see, NASA produced a thing which you could see the frack fleets and the flaring in the Bakken shale from satellites. You could see North Dakota, South Dakota, Minnesota, Minneapolis. You saw Minneapolis. And then suddenly in North Dakota, there was something that looked a bit like Minneapolis. And it was actually the Bakken shale. So, you know, we have to tidy up our own act as well and be very honest about it.
No, it's a very, very famous photos, and we featured those in the Journal of Petroleum Technology before, addressing on how companies are addressing some of these issues. Well, finally, Sir Mark, this brings us to our last question. You've been involved in the oil and gas business for longer than probably anybody who's watching this video right now, and so I'm curious to know what your thoughts about, since you brought it up, international cooperation are, collaboration, but on a different scale. So I'm kind of hinting at the SPE here. You've been a member for, I understand it, over 3 decades. And, this kind of collaboration that we promote here a lot of it really takes place between the rank and file petrotechnicals who use SPE to share and exchange ideas. And so when you talk about collaboration at such a 30,000-foot view of the world involving geopolitics and international business, what role do you see knowledge sharing playing amongst the people who are in this business and going to be driving it forward for the next generation?
I think it's absolutely essential, and I congratulate the SPE on actually doing in this sort of organization the best business. I mean, you have units in different affiliates, as it were. I can't think of the proper word, but in different countries, in the Middle East, in oil-producing countries, you are completely open. Your management, presidents, and so on have come from all around the world. I think the SPE has done a fantastic job, and it's really inspiring. I often say that the visionary who called it the SPE, not the ASPE, unlike the AAPG, I'm a geologist, the AAPG has never been as global. And one of the restrictions on it being global is that it starts off as the American Association. I was president of the Geological Society of London, which has also never been quite as global as we would like to have been. So I think the SPE has had a really good approach to it, and I congratulate you and all you younger members out there. I really think you're onto a good thing, and it's terrific for keeping your knowledge up, networking, and learning from each other. So congratulations.
Well, Sir Mark, thank you for being part of that global community and helping enrich it. And I think you've shared a lot of good views today that will be food for thought for everybody tuning in. But I think this is a perfect place to wrap up our chat. So I want to thank you again for joining us, everybody. Sir Mark, I want to thank you. And I hope everybody keeps following us on the social media channels and tunes in to the next SPE Live. We're going to be covering topical discussions like this, and we're also going to be handling a lot of in-depth technical discussions. So with that, I'll say goodbye to everybody. Thank you.
Thanks very much, Trent. It's been a pleasure.
Cheers.